This is the Financial News Network. I'm Christy Duffy. Yahoo doubling earnings in the fourth quarter, but revenue down as the company trails competitors in the race for online ad dollars. Yahoo shares are also down early Wednesday on news of the results. Joining us now over the phone to discuss is Macquarie analyst Ben Schachter. Ben, thanks so much for coming on.
Thanks for having me.
So revenue has fallen since CEO Carol Bartz came on in 2009, and the company projected a continued downfall in the first quarter of 2011 by about 4 to 10% over the prior year. Do you think perhaps she's not the right person for the job?
Well, I think there are pretty fundamental problems with this company, and it's not just one person. Having said that, so far at least she hasn't really been able to turn things around. I think it's going to be difficult to do. I think there are some very fundamental issues here that are difficult to address, and there are no easy solutions.
It's been under speculation for a while, but as the stock price has faltered, do you see a takeover bid looming closer?
I think that's pretty unlikely. I think that these are issues that the company needs to work out on their own. Someone buying them is not really going to change that. The only issue there is the Asia assets, the value there, and there may be some folks that look at that as a potentially attractive piece of business that they want to purchase sort of in the back door by going through Yahoo to get to the Asia assets.
So they have some issues that need to be looked at. So what's the company's game plan to get more competitive in the online search space against rivals Google and Facebook?
Well, they're basically saying with search that they want to focus just on the consumer experience, and now that they've removed themselves from worry about indexing the web and some of the heavy lifting that goes on the back end of that, they're just going to focus on the front end and what consumers actually see. So far, they have not done a particularly good job of improving that experience, and I'm not sure they're going to be able to compete in a meaningful way there. But that's their game plan right now, and we'll have to see how it actually plays out. Can
you speak to what kind of compelling services or methods for drawing audiences and marketers?
Well, they haven't spoken a lot about what they're going to do, but clearly they want to essentially make it a friendlier environment, an environment that kind of gives you answers more than gives you links. An example for that would be when you search for a movie, having a video of the movie trailer instead of simply a link to the movie page, things like that.
Okay. Were there any portions of the business that did do well this quarter that they could perhaps focus on growing?
Yeah, the display business still continues to outperform, continues to actually take share overall. It was up about 16% year over year in the quarter. We think overall for 2011 it'll continue to grow double digits. That's a decent business that's going to continue to grow for them. They're still a leader there, and there just aren't that many places where a big advertiser can deploy large dollar amounts quickly, aside from Yahoo and a few other big portals. So they still have a decent position there. The question is, can they capitalize it? Can they grow that? And there we're still concerned.
All right, and as I mentioned at the beginning of our conversation, shares of Yahoo are down so far Wednesday. What's your price target and rating on the stock?
We have a neutral rating and an $18 target.
All right, thanks, Ben.
Thank you.
Ben Schachter of Macquarie. For further updates and analysis on earnings, stay tuned to the Financial News Network. I'm Christy Duffy.